One of my concerns, and by the way, I'm not saying this is going to happen. This is a worst case scenario. This is basically the 100-year cycle comes to fruition, 1929, 1930 to now. That would be a 100-year cycle. Now remember, the influenza, right, the Spanish flu mirrored COVID 100 years later approximately. So there is something to be said for the 100-year cycle. And what you can see here is that if you go to these pivot highs here, pivot and pivot, this was a nice double top, okay? Notice how because of the Fed's printing of money, there was so much liquidity thrown into the market that we never had a retrace to the scene of the crime. There was, once you broke out, it was off and going. And so my fear is that the worst case scenario could be that we pull back down to this high and retrace to the scene of the crime, which would be major support.
The Fitch rating downgrade to AAA plus from AAA for U.S. Treasury securities didn't cause much of a stir in the financial marketplace, but it should be taken quite seriously. S&P downgraded U.S. debt to AA plus back in 2011, and Moody's has had Treasuries on negative watch for more than a decade. While the markets have all but ignored this, and we note some critics calling the rating ridiculous, the public should take the downgrade seriously. The U.S. budget deficit is 6% of GDP at a time when the U3 unemployment rate is 3.5%. Basic economics says that well-managed fiscal policy should be countercyclical, meaning that when we are at full employment below 4%, there shouldn't be any deficit or perhaps even a budget surplus. It has been quite a while since the budget deficit was less than 2% of GDP. What happens when all the low-cost debt issued during the 0% interest rate years post-Great Financial Crisis to 2022 has to be refinanced at today's significantly higher rates? This is true for the federal government, for state and local ones, and for the vast majority of America's publicly traded companies. The answer is significantly higher debt service costs and much slower economic growth, if any. In this video, we're going to review the S&P chart with Gareth Soloway, who points out the various levels and how it relates to what we are experiencing in the market right now. He also talks about gold, Bitcoin, and the total lack of volatility in the crypto market. Let us now head into the video. As you watch, show your support by clicking on the like button, subscribe, and drop your comments below.
When we look at the markets, there's some key things that happen over and over again. So if we jump over to this chart here, this is the monthly chart of the S&P 500. And the reason why this is important to look at, it's called time frame analysis. And so if you're a day trader, generally you're looking at the 10-minute chart. That's what I do. Some people look at the 5, some people look at the 15, some people look at the 60-minute. But in general, for day trading where you're in and out in 10 seconds, in a minute, in a couple minutes, in an hour, you want the 10-minute chart. As you go to the bigger picture, you're going to get bigger, longer-term moves. So when you're looking at the daily setups technically are going to show you basically what's going to happen over the next 1 week, 2 weeks, month. If you go to the weekly chart, you're going to see what's going to happen most likely over the next, let's say, 6 months. If you go to the monthly chart, you can likely see what's going to happen over the next 1 to 2 to 3 years. So what we can clearly see is, all right, so check this out, guys. This down here, this was the dot-com bubble on the S&P and the drop, and this was your financial crisis, right? And there was your collapse after the financial crisis. Now, please note this. From the low of the financial crisis, you have not had any significant, and I say significant bear markets because you've had quick little drops that you could call a bear market, like, for instance, COVID. But COVID lasted like 2 months in the markets, and then we were back basically to all-time highs. And so you could see that as soon as the Fed started printing money, the market started to take off. The culmination of moves, if you look at any cycle out there, the culmination of almost all the moves is when you get this cataclysmic surge to the upside. Think about this. It's the final throws. Like if you're, you're at a point where it's like the final push of the race is just that last explosion and then it's done. And that's what I'm thinking is going on here. Let me get rid of that there so we don't need to see that popping up on the screen. But that's what's happened here. Here's your retrace, which I view in terms of the psychology of the market as your pullback. Here is complacency. Everyone has gone into this mode, and you can see it on the social media platforms. Anytime I post anything bearish, they're like, oh, he's such an idiot, all this stuff. And that, to me, I read, and I want to make that clear, folks. It's one of the best indicators I have ever found is gauging public sentiment. When everyone is bullish and everyone is telling you you're crazy, chances are you're right. And remember that. So here we have the scenario where we've gone up here. Now there's two scenarios you could have here. So number one, we could make a double top and pierce the highs, so we could go up a little bit higher. This would be a Bitcoin type top, right? We saw Bitcoin make that M top. The second scenario is more like the 1929-1930 Great Depression and some other ones where you come down and you retrace, making everyone think you're going to go to new highs. Instead, you start to collapse. So we're going to watch to see where that goes. But what I want to show us now is, okay, so what's your Armageddon scenario? Let's talk about where this market could go down to if you have a cataclysmic sort of catastrophe. So what I want to do now, we're going to stay on this camera so you guys can follow this, but I'm going to start drawing some trend lines. So one of the things I've learned in technical analysis is that generally there's this tendency for markets to retrace to the previous breakout point. All right, so what I mean by that is if we look at the, let's look at the gold chart here. Let's quickly go to gold. What we can see on gold is that here you have a pivot top to pivot top, you broke out and you had a beautiful move and you retraced to the scene of the crime. You came back to that same trend line. If we look at the dollar, let's look at the DXY, okay? Here we have another beautiful trend line, right? Pivot lows all the way across. We broke down here, and let me zoom in so you guys can really see it easily. So we broke down, what did we do? We retraced to the scene of the crime. So there's this tendency to retrace to the past breakout level or breakdown level before continuing on your journey.
Corporate bankruptcies are up 25% over the past year, are rising fast, and are at their worst level since the COVID lockdowns. The Conference Board's leading economic indicators have been negative for 15 months in a row. This number of negative readings has never failed to signal an oncoming recession. That's why they are called leading indicators. In addition, a yield curve inversion of the magnitude and duration of the one that exists today and is likely to continue for several more quarters, like the LEI, has a 100% track record in forecasting the recession. Gareth dives into the crypto market, pointing out that the 4-year cycle of Bitcoin that signals its massive bullring might not be the case this time, as he advises viewers to take everything in the crypto market with a grain of salt. He also mentioned that stocks are a more attractive investment than cryptocurrency at this point. Let us get back into the video.
Basically, if we look at the daily chart of Bitcoin, I mean, it doesn't get quieter than this. I mean, look at the range over the last 5 days. Yeah, you had a little blip here and then you reversed it. You had this candle, then you had this pop over here. But all in all, crypto volatility has died. Now, why has it died? Well, number one, the stock market's been honestly a better trading vehicle. So if you look at where money is right now, money is saying, well, where is there movement? And there's more movement in stocks, right? I mean, think about Apple on Friday, guys. What an awesome drop on Apple. That's a $3 trillion company, and it's moving more than Bitcoin, which isn't even $1 trillion. And so money has gone to the stock market. There's also this overhang of what the heck's going on with Binance, with the SEC litigation, with Coinbase, all of these other things, inclusive of, is the Ripple issue really dead? Like, meaning that they're not a security, or is the appeals process going to draw this freaking thing out for 2 years before we really know, is Ripple a security or is it not? And so that's just sucking the life out of it. Now, in terms of support, I continue to be a fan of the just above 27,000 range, right? So if we take a trend line right in here, and for some reason it's not a, there we go. So if we just take that trend line alone, this continues to be my key support level that I'm watching. And again, right now, this is an upsloping trend line. So it's right around this level here, around 27,000, we'll call it 500 right now. So notice how it's upsloping. There's also a pivot right in here. Okay, if I zoom in, let me zoom in on this for us. So this pivot right here is a support level as well, around 28.2. So these two lines are converging. And again, I've said this to you guys many times, that on Bitcoin, that is going to be a very pivotal level. If you hold it and you rally up, you honestly could break out. You could easily break out. On the other side, if it breaks, a long-term uptrend trend line is breaking, and that makes Bitcoin very, very vulnerable. Now, again, long-term, do I think Bitcoin's going to 100 to 200,000 to 300? Yes, I do. When? I honestly have no clue. I'm not a believer in this 4-year cycle, guys. I know it's happened 3 consecutive 4-year cycles, but I also encourage us to recognize that the Federal Reserve was printing all of those cycles, right? So it was always lenient and more lenient monetary policy, culminating with the COVID crash, which created even more liquidity in the system, right? So you have to kind of take it with a grain of salt and say, yeah, it could be a 4-year cycle here, or maybe it's not. I want to just be clear on this. It's the middle of summer, volume is dead. When you see a big sell-off on a Friday afternoon, that is not a good signal for the markets overall. Now, even though we're bouncing this morning, S&P is up a little bit. We're seeing the NASDAQ kind of regain a little composure initially. I'm just saying to you, in the bigger scheme of things, it is not healthy to see that end-of-day Friday dump out. But I just want to remind you that there is a CPI data print coming on Thursday, 8:30 a.m., CPI. That will be huge for the market. That's going to be the biggest thing. And remember, I've talked to you guys about how energy prices are soaring, gasoline, oil, agriculture has been generally trading higher. So it's going to be really interesting to see the month-over-month numbers and the year-over-year numbers in CPI now, with us hovering around that 3% level. Do we start to uptick? Do we stall? Or do we continue down? If you continue down, markets are going to like that. It gives the Fed maneuverability. If we uptick a little bit, you're going to see some trouble.
The homegrown humanitarian organization, Singapore Red Cross, has included cryptocurrency as a newly accepted form of donation, partnering with AAA, the first crypto payment gateway licensed by the Monetary Authority of Singapore, ahead of Singapore's National Day. With AAA's white-label crypto payment solutions, the Singapore Red Cross can now receive cryptocurrency donations from supporters to deliver humanitarian services to uplift the vulnerable, particularly in Singapore. All crypto donations will be converted into fiat currency and settled via bank transfer within 1 business day, ensuring the funds are readily accessible to support the organization's humanitarian initiatives. Singapore Red Cross will accept donations in various cryptocurrencies, including Bitcoin, Ether, Tether, and USD Coin. The process is simple, as all crypto wallets are supported through AAA. Mr. Benjamin William, Secretary General and CEO of Singapore Red Cross, enthused cryptocurrency donations have become increasingly popular due to the efficiency of processing them and their global accessibility. By accepting digital currencies, we open our doors to a new segment of donors who are tech-savvy and wish to make a difference through their digital assets. Enabling cryptocurrency donations also opens more opportunities for the new generation of donors who are off fate with digital currencies to consider philanthropy and helping the vulnerable. We're honored to partner with the Singapore Red Cross in enabling cryptocurrency donations and empowering donors to support humanitarian causes with digital assets, said Mr. Eric Barbier. Crypto payments offer faster, more secure transactions, reduce administrative overheads, and ensure that the funds reach those in need promptly. The new payment option is now live on the Singapore Red Cross website, allowing donors from around the world to contribute using their preferred cryptocurrencies. Even as cryptocurrency volatility remains dead, according to Gareth Soloway, the adoption of cryptocurrencies all over the world remains at an all-time high and would see even further increase with the approval of the ETF. Meanwhile, what do you think of the worst-case scenario proposed by Soloway? Let us know your thoughts in the comment section below. Also, don't forget to like, subscribe, and turn on notifications for future videos. Thanks for watching.